ready to crack open a cold one. And by cold one, I don't mean beer, I mean a Coke. And by Coke, I don't mean Coke. I mean Coca-Cola, the soda. That's right. No drugs here. Don't worry about it, guys. Coca-Cola just reported some earnings this morning. You already know it. Told you this was one to watch, and guess what? It was. Up 2.36% as a result. The whole market's currently pretty well flat, but Coca-Cola is up. And you know that's a weird day when Coca-Cola's beating the market, right? They're usually the guy to follow for the how the market's doing. So, what's going on here with this earnings? We're going to take a look at it and some of the reasons for it. Let's see. Not Keebler cookies, get out of here. You're delicious, though. Coca-Cola EPS in line. Yeah, that's right. On a GAAP basis, they beat by 4 cents, and revenue beat by 80 million, which is an 8% growth year over year, which, hey, if you're looking at it from my perspective on it, I mean, Coca-Cola is such a well-established company. Growth that high is actually relatively shocking. You don't expect to have that much growth when you're that large of a company that's that established. It's hard to find that, and that's one of the main focuses that I mentioned here would be some of the growth vectors that they need to look at and some of those metrics, and we'll take a look at those pretty shortly. So, again, comparable sales shined, as I said in that video entailing what stocks are going to be reporting earnings this week. I mentioned how important organic sales growth were to this, and their organic sales growth did beat their consensus. They posted a 5% growth in organic revenue, 3% growth in North America and Asia Pacific, 4% gain in EMEA, Europe, Middle East, Africa region. In case you were curious, that's what that acronym stands for. I'm pretty smart, right? Strong comps were turned out by Latin America, plus 12, Global Ventures, and Bottling, plus 9. Okay. EPS, despite a 6 basis point headwind. Okay, that's right. It still did it. That's good for them, right? Operating margin fell. Yeah, that's something rough to look at. Fell 28.1% during the quarter versus 30%. So a 2% drop in operating margin obviously is not something I enjoy personally, but you know what? It happens sometimes. Full year guidance reaffirmed. Revenue of at least 5%. Organic revenue, that is. Again, organic revenue is really their goal right now. That is their growth. A company that really was stagnant. They're finally finding some growth. So, where do I find concerns necessarily? Obviously, the stock's reacting pretty positively. Where do I find concerns with Coca-Cola right now? Obviously, I got to have both the bull and the bear case here. We're going to talk about the bear case of what's going on here. What concerns me with Coca-Cola stock? Well, I mean, if we're looking historically, this is a company that over a 4-year period here was just flat, and then all of a sudden, just this past year, up 21%, right? I mean, you can even see it more in this max chart. I mean, look at this. From the year 1998 onward. Now, needless to say, there were a couple stock splits in the interim period, okay? That is something to mention here. But overall, I mean, from its peak here, it's not quite at its peak, but, I mean, relatively stagnant over a, 10, 15-year period. And what's the real reason for that? Well, so Coca-Cola has never really been about the growth, except for if you got in, in 1979, you certainly saw some growth. Yikes, that'd be wild. So what's going on now that's leading them to having such a darn good year? I mean, year to date, up 18% nearly. Well, a lot of that, again, as I mentioned, is a restructuring of their brand. They have a couple new things going on. Talk about the positives that they have real quick. So, if you didn't know, these are the brands that Coca-Cola owns. Coke, Diet Coke, obviously Coke Zero, Cielo Water, Dasani Water. Dasani Water tastes like Garbo. Del Valle, Okay. It could be Del Valle. Sorry. Don't mean to be rude. Fanta. I'm not calling it Fanta. It's called Fanta. Sorry. Do I call it Fanta or Fanta? I actually don't know anymore. Fairlife milk. They make a mean chocolate milk. I don't know if you've had it, but they make a mean chocolate milk. Georgia coffee. I don't know. Gold Peak tea. Everyone loves their Gold Peak, particularly unsweetened. Needless to say, the sweet's just a little too much sugar. They have Honest Tea. Honest Tea, get it? Honesty? Do you get it? Mellow Yellow, the counterpart to the Dew. And you know what? Mellow Yellow, it's rare you find it really, but I'm kind of a fan of Mellow Yellow. It's pretty good. They have Minute Maid, make some quality lemonade products. You already know that. Adwala, it's like a fruit smoothie type deal. I don't know how to say it. It's like a naked juice almost. If anyone knows what naked juice is, which is just a mixture of a bunch of fruits and vegetables and a bunch of sugar too, which is a lot of it's mostly natural sugar because it's, fruits for the most part. And Adwala, owned by Coke. Powerade, the superior version of Gatorade if you ask me, but only the Powerade Zero. Powerade Zero is better than normal Powerade, and I don't have an answer for you why. Simply Orange, obviously very popular orange juice. Simply, they make a lot of things, obviously, not just orange juice. Simply also makes, now they have watermelon juice out there. They have every kind of fruit juice you could imagine. Like, their strawberry lemonade simply just does whatever they want to do. And we just bow down and buy it. Smart Water? Hey, that's pretty interesting. Smart Water. Everyone loves a nice Smart Water. What's the point? I don't know, but people can enjoy Smart Water. I don't buy Smart Water because normal purified water is fine for me. Sprite. That's right. Good old Sprite. Gotta love Sprite. Surge. Now, speaking of Surge, I mean, you can just tell from the packaging, this is a brand from the 90s, right? And you want to know what? Surge is back, baby. That's right. Surge is just a lovely, sugar-filled soda. It's great for you. You want to click on the product info? You know I do. Look at Surge. Look at Surge. Do we need to talk about... Look at all these carbs. Look at all these carbs. 56 freaking grams of sugar. Ah! Citrus. Look at that. Why even mention it? 0. Ooh, it turns red when you highlight it. Good job, Coca-Cola. High fructose corn syrup's the second ingredient. You already know it. 69 milligrams of caffeine. Surge is lovely. Comes in a 16 fluid ounce can. It's a big boy. That's a big boy. So, goodbye, Surge. We'll get off of talking to you. Obviously, vitamin water. I've never really been a huge fan of vitamin water. I think they have a weird taste to them, but I know some people swear by vitamin water. I think it's good. That's entirely up to you whether you like it. They obviously have a good old Zico. That's what I'm calling it, Zico. And most recently, their purchase of Costa Coffee. And Costa Coffee, this is a report from the Atlanta and Dunstable, Bedford, England. That's not, is that okay? Costa Coffee. This is a $4.9 billion acquisition. Boom, $4.9 billion acquiring Costa Coffee. It's European company that, you know what? They have branches everywhere. They sell coffee everywhere, but obviously they're trying to look for more growth again, getting into the coffee business. They have already, I believe, a couple different avenues for that, but Costa Coffee was obviously already a well-established brand, and that's why they went ahead and purchased them. So obviously, we'll see how that impacts in the future because this sale just went through as of August, I believe. Or that's when it was announced, at least. So we'll entirely see how that increases their global platform in terms of coffee. And I've talked about these brands. I mean, one major avenue for growth too, which was pretty exciting, which is, Coca-Cola doesn't normally come out with like, this is the new and exciting stuff. They're not really known for that kind of announcement, but Oh, see, look at this guy, Alex. This dude's named Alex. That dude's named Mia. She doesn't look like a Mia. She looks like, well, I don't know what to say she looks like. But obviously the announcement of new Diet Cokes. New Diet Cokes, you got that right. What do we have about these new Diet Cokes? So instead of just a normal Diet Coke, they had flavored Diet Cokes now. They originally reached with 4 flavors, which is the Feisty Cherry, Blood Orange, and Ginger Lime, I mean. Now they got Blueberry, Acai, Acai, Acai. I don't like that word. Screw your super fruits, they're fake news. Strawberry Guava, sounds pretty good. Obviously, they still have Ginger Lime, Feisty Cherry, Twisted Mango, and Zesty Blood Orange. So, as far as these are concerned, I haven't had any of these guys. I've tried the Zesty Blood Orange, which was an okay time, but a lot of people do enjoy that. I've heard that the Feisty Cherry was actually a little bit spicy, which is a little scary to me, but who knows? These are available in pretty well most every retailer you go to, or you can buy them straight from Coca-Cola. If we're looking, I also want to mention another big old source of growth for them. If you look at this guy, 7.5 ounce cans. So they brought back like Coca-Cola minis. They have Diet Coke minis. They have their mini brands now, which for a lot of people, I mean, this is a big hit. Maybe not for Americans, right? Because we're used to what we're used to. But for most other countries, these mini cans are just the normal serving size. And this is what a normal serving size like used to be back in the day. A normal can used to be the 7.5 fluid ounces, but then we kind of supersized it. Now we're getting 12 fluid ounces in a can. You know, it's a little bit bigger of a can. But again, this is just on most of both their Coca-Cola and Diet Coca-Cola products. So let me look at these strawberry guavas. Oh, baby. Rated 2 ratings, both 5 stars. You already know it. Strawberry guavas, you can't get in the minis. You can only get the normal Diet Cokes in the minis. That's fine. No sugars, no calories. Don't know how that's detailed. Break out of your comfort zone. But, hey, that's pretty exciting. Because why, though? Okay. Well, that's interesting. So we're going to move onward now. Those are the Coca-Cola brands. Why they might be finding some of this growth. It's pretty exciting to look at. We're going to look more now at wrapping up these earnings. You know what I mean? I don't mean to be so far down on this page. We're going to go all the way up to the start. I was doing some reading. I'm sorry. Revenues grew 6%, or 8%, I should say. Organic got 5%. You see that? Price to mix growth of 6%. Nice. 2% decline in concentrated sales. Margin decrease. Earnings per share. Gained value in the non-alcoholic, ready-to-drink, NART beverages. Gotta love it. And cash flow year-to-date was $7.8 billion. So that's pretty exciting. Making that kind of money is pretty exciting. Gotta love making money, especially when it's in the billions. You got that right. So obviously they're working a lot on expanding priority SKUs, which are different, different brands, different products that they're releasing. You got to distribute the priority ones, which a lot of them for them is like Coca-Cola Zero and other organic products such. That's kind of their focus right now. They got to work on making sure they have that ready, packaged, and ready to send out. Globally, that's where they're going to find their growth for the most part. They're going to expand their growth in sparkling beverages. That's kind of a big deal for them. Coca-Cola Zero Sugar, gotta love it. Coca-Cola Plus Coffee, obviously coming out internationally, gotta love it for them. Another thing of growth. Premium brands here. So India is now the largest global market, or 4th largest global market for smart water. Who would have known? But obviously they're trying to seek growth. Even on a water brand, they're trying to seek growth. I mean, that's pretty exciting. We'll see. We'll see how they do there. So obviously they're talking about Coca-Cola Energy, which should be releasing next year. We'll see how that goes for them. Obviously, it's kind of weird. I think energy drinks were kind of a fad maybe years, 10 plus years back, and now they're kind of back because people threw them under the bus. Now, honestly, energy drinks are kind of back. A lot of it's kind of with the Bang Energy really taking a lot of that market, just because they're a 0 calorie, energy drink, and they have so much freaking caffeine it'll kill you. You can't even drink it if you're under 18 supposedly. Which please don't. If you're under 18, do not drink Bang, and also you're not allowed to drink it if you're pregnant. So kind of dangerous to drink, you might think, but they taste freaking amazing. I just gotta tell you that. I've tried Bang, several flavors, and they're good. Okay, that's all I can tell you. But just stay away from them because it's bad for your heart. Probably bad for your liver too, to be honest with you. But we'll go ahead and forget about that. See what Coca-Cola Energy can provide for us, right? See what kind of a product they can do. Sleek cans, 12-ounce sleek cans, available nationwide. You got that right, in January 2020. So we're close to Coca-Cola Energy. So next quarter, they are not really going to see the impact, right? Because if they release it end of January or whatever it might be. Because their next earnings report would be in January. So we'll see how that goes. They're probably not going to see any impact. They're probably going to release it at the end of that quarter maybe, and then you can just see a full quarter's worth of growth thanks to Coca-Cola Energy. So we'll see what it is. Package innovation, obviously this is a big part for them. They have a new hybrid bottle, which is made 50% plant-based and renewable material and recycled PET. 50% plant-based? You're telling me you're making plants, grass into my bottle? That's true. That's cool though. So expansion of 100 Dasani Pure Fill water dispensers, leveraging Coca-Cola Freestyles, which, again, Coca-Cola Freestyles, if you don't know about them, they are kind of those machines, which I'm going to show you here real quick. You know what a Coca-Cola Freestyle is, right? It's the one where you go ahead and just do literally everything you could ever want on a beverage machine, You're saying, well, here's this soda, and then here's the different flavors that come with it. Minute Maid pink lemonade. Mellow yellow cherry. Okay, excuse me. Let me see. Obviously we gotta go see an image, and you see them, and honestly, there's a couple places that do them. I believe the last time I was in a Wendy's, they had it. Here's a look of it. I did not mean to click on that, but we clicked on it, so we'll zoom in real quick. But that's interesting, right? You can just choose your type of soda and or water at this point, because now they've increased that. And go ahead and choose whatever drink you want. That's pretty interesting. I'm gonna go more into now the points of note here. We're going to talk about some of the numbers here. Net operating revenues increased year over year by 8%. Obviously, that's good. Gross profit, slight increase. Okay, that's interesting, right? Operating income, actually a slight decrease. So that is something to consider as well. Obviously, there's more on this general and administrative expenses here than there was in the previous quarter, Q3 last year. So it's something to look at. But overall, they still made some money. Okay, income before taxes, three billo, as I'm gonna say. I'm gonna call him Billo. So if we're looking at those numbers, nothing's shocking. Overall, the company's, again, relatively stagnant, in my opinion. So this is in my perspective. But if we're looking 9 months end, so this is through 3 quarters of the year, revenue up 6%, gross profit up, and operating income up. So it's one negative quarter, but if we're looking through the entire year so far, they're still up in terms of the operating income they're pulling in. This was just a rough quarter. I don't know what increased administrative expenses they would have seen, but obviously they did see a little bit more. So current assets, 7.5 billion in cash. And you know what I don't like? Long-term debt, 31 billion. That's what I don't like about Coca-Cola. 31 billion in long-term debt, but current assets of 7.5 billion only. So you're not able to pay for that. But again, a lot of companies that I point out debt with, they're companies that don't make that much money, but this is a company that, is making 7 billion in a year in cash. So they can pay this down. The companies I'm more concerned with usually are companies that can't pay it down because they just don't make the revenue, or they don't make the income, that is, so they don't add cash usually. But again, obviously that is a concern, something to mention. And if we're mentioning that, I want to talk about the financials too, just statistics of this company. Right now, a pretty high PE for Coca-Cola. They traditionally don't trade at that high of a PE. With a forward PE of 24. I mean, it's weird to see the forward PE down because you don't expect that much growth from a company like Coca-Cola. So they're for some reason transitioning back into more of a growth company. And it seems weird to me. I don't know what's going on there, but they're really trying to grow. This is a company most people just buy for the dividend, right? If we're looking dividend-wise, this is a dividend giant. If we're looking all time from 1989 to they started paying a dividend, this is a 10-year growth rate of 7.46, right? That's crazy. But if we were, we'll look more realistically. 5 years still around 7%. 7% dividend growth a year. I love that. I know that. I don't know about you, but to me, that's pretty exciting. 57 years of growth. And that's what this company's been about. But right now, the payout ratio, if we're looking at payout ratio, 77%. It's not absurd, but it's a little bit high for a company like this. There's not going to be a dividend cut. I already know that's a fact. But will they continue 7% growth? Probably not. It's probably going to go down to like 2% growth per year. Still a yield of 3% is very nice, though. That's why I'm in the stock as the dividend. I got to be honest. I know the valuation isn't necessarily there from my perspective, and it sounds a little hypocritical, but overall, I like the company just for the dividend. They're a consistent dividend grower, consistent dividend payer. That's what I love about them. That's, a little long-winded, but that's what I have to say about these earnings, so I hope you enjoyed.